Okay, so basically we have the 10-year yield sitting right on top of technical support right here. What I'm going to do today, so we talked about this yesterday, so I'm not going to go into this today. There's not a lot of changes, but what I wanted to do was do something different today. Let's look at the bigger time frame. So what I want to do here, guys, we're going to flip over to the monthly chart. Now, when we flip over to the monthly chart, we can clearly see that this was your decline from essentially COVID down to the lows when COVID hit, and then eventually we saw the reversal back up. And you can see that pattern, kind of like a cup pattern, a little bit of a handle right here for that secondary move to the upside. But let's go out even more. Let's zoom out even more. If we zoom out here, let's look at where rates have been. And basically what this is this is going all the way back to basically 1980 when the rates were literally 16%. So those of us that might be a little bit younger, maybe if you're, sub 40 years old, you weren't alive when rates were up to 16%, but it does put it in perspective when rates are back to 4.5 to 5%, where they are historically. The problem is this. People get used to borrowing money at certain rates. They basically have more money in their pocket when rates are low, and so when rates go up, it puts hardship on people, even if historically it's not necessarily where rates have been. People essentially adapted to rates down here and were spending as such. They got their kind of means larger and larger, and therefore it is a hardship even moving rates back to 5%. Now, interestingly enough, what I want to do now, we're going to erase this trend line right here, and we're going to just draw some other trend lines on the chart. So what I want to do, guys, is as we bring this into focus, I want to take a trend line, and I want to extend it down here. And I want to show you how charts even work with the 10-year yield, all right? So there's your trend line. And this trend line goes back to 1994. But what I want to show you on this is amazingly how you literally had a trend line here to here to here and right to here, and how when it got to that level, we saw rates get pushed down and pushed down. And look at what happened here. We saw rates dumping out during COVID and during that just post-COVID period. And then look at the move up and the breakout. And this has been a breakout in rates. Now, one of the things to remember is most people are expecting the Fed to cut rates over the next year or so. I think the first rate hike is projected now somewhere in May of 2024. Now, interestingly enough, is it possible for rates to come back? The answer is yes. But what we know on the chart is that your max downside is probably right around 2% on the Fed funds rate. Now, that's still a lot of cutting. So we could be in a very dramatic recession if rates go back to that level. But on a technical basis, that level now becomes support. And as we can see, this trend line has worked beautifully. So what's to say it won't work again, and meaning rates will bottom out at 4%. Now, let's extrapolate that thought process. Does that mean that the economy is doing great? Or my bigger concern is that if rates come back here, what do you think is going to happen to inflation? If money printing and free money or low interest money is out there, inflation's going to come back up. That's going to eventually cause the rates to have to go dramatically higher. And again, you have to wonder if we're repeating what happened in the 1970s. In the 1970s, we had inflation go like this, then it came down sharply, and you know what happened? The Federal Reserve back then started to lower interest rates too quickly, and inflation ended up going up and making a new high before rolling down like this. And so you have to wonder if this is telling us exactly that, right? Let's think about that. Doesn't this potentially pretend to essentially be that same sort of thing, where we have this scenario where we're going to see rates come in, but then have to go up because inflation is going to go up like that? And that's very interesting on the charts to take a look at.